Hey everyone, and welcome to this tutorial on how to create a Bloodhound strategy template with the Zerolag Oscillator, the session pivot, and the VWAP indicators. This is something that I went over in a recent Bloodhound webinar. There is a link to this original webinar in the comment section below. So if you haven't seen that presentation, I recommend that you go ahead and do that first. This will make a lot more sense to you that way around. And the purpose of this presentation is to give you a little bit more in-depth information on how I created this template and how you can customize it for your own trading. As I mentioned, this is created for the E-mini product. So if you're trading other instruments, you might want to look at playing around with the different settings that are included in this this strategy. So this is going to be a very hands-on presentation. We're going to go into to Bloodhound and build the strategy from scratch. And so hope this is not going to be too technical, but if you just follow along, I think it will all make sense to you. And if it doesn't, then you can go back a little bit or send us a question in the contact form over at LizardTrader.com. So just to recap quickly the logic of this strategy, we're working here with the daily VWAP indicator and the first standard deviation of the VWAP line here, the VWAP band. And basically what we're doing is evaluating trading setups if the price is within this value area. That's where new trends are likely to start, and where institutional buying and selling for the most part will take place. So we want to be in that value area before looking at trading setups. And then if we're in that area, then we'll use the Zerolag Oscillator to tell us what the trend is. You see here the zero line here is green, which means that we are in an uptrend, and it's red if we're in a downtrend. And we'll then trade retracements into that trend. So here, the white bar here means that we have a short-term oversold in an uptrend, and so that presents a buying opportunity for us. And we're looking for a signal bar. A signal bar is a up thrust bar in a long scenario where we have a close above the high of the previous bar, or if the histogram bar here is higher than the previous bar. So if we have either of those or both, then we have a signal. And let's see over here, we don't have a down thrust bar, but we have a histogram bar, which is lower than the previous setup bar, and that gives us a signal then. On the short side, as you see, the setup bars are yellow, and those are indicating a short-term overbought in a downtrend. So presenting us with a opportunity to sell at a better price than previously. And yeah, as for exits, as I mentioned, the second standard deviation can be used for that. And you also want to pay attention to these previous VWAP lines that are marked by the indicator. Here we have the VWAP band of 3 days ago, and as you see, price is stopping right around this area. So towards the second standard deviation of today's VWAP, and the VWAP of 3 days ago is a very important resistance level and a logical place to exit this trade. There is also another landmark support and resistance indicator that we are using for this strategy, and that is the pivot point indicator. The pivot point indicator has a price level which is defined by the range of yesterday's trading. So we had the high and the low and the close of yesterday divided by 3, creating this pivot level here and the support levels below and above the pivot. And basically, we don't want to trade straight into areas like that. So if the price here has just hit the support level, or if we're trading here straight up into a resistance level, we don't want to take those trades, as we can expect bounce backs from a situation like that. So this strategy will help us filter out scenarios like that. Okay, then we can go into Bloodhound here and start creating the strategy. The first thing that we'll do is to create a condition telling us when the price is moving within this first standard deviation band. And to do that, we will just start from scratch here. We will go and create a new strategy and start building with the solvers here. We'll do a indicator comparison here to start off with, and hit add, and we will compare that the price is within the first standard deviation. So SD1 comparison, we will call this solver. We will look at both long and shorts. We will compare with the indicator LizardTrader current day VWAP. We will add that, and we will look at the upper band and the lower band standard deviation bands. We hit OK, and well, actually, this was a little bit roundabout. I want to have price in here, and I want to have the indicator, the VWAP indicator down here. That will be a better way to, and more logical way to present this. So current VWAP as indicator B and price as indicator A. Okay. And we then want to define what kind of price levels we can have the close, but in this case, we will work with the low and the high level. So we want the high to be above the lower standard deviation, and we want the low at least to be below the upper standard deviation. I'll show you in detail here shortly how that looks on the chart. It will make more sense to you. You do want to pay attention to this output section though, and set that correctly. So as I said, indicator A, I want the low price to be below the upper standard deviation. So I set those to 1 in order to indicate that those are true. And in terms of high level of the bar, I want it at least to be above the lower standard first standard deviation. Okay, so I'll go into logic, and we will create a new logic called entry. And I will now add the solver that I just created. And in order to tell it that I want to look at both long and short signals, I will add a function node here, the long short modifier. I will set that to product in order to tell it that we will look for both long and shorts, connect it all up. And now you see that when the price is above the first upper standard deviation, then there is no signal. And the same thing for the low. The minute the high is above the lower first standard deviation, we're again in a position to look at trading setups. So that's the first filter that we've added to our strategy. Now we'll go in here and save this. I will save as tutorial and hit OK. And now we can go on and start focusing on the next step, which is going to be the zero lag. We're going to add the short and long signals, and we go in here and we add another indicator comparison. This time we will enter here the zero lag as indicator A. And the nice thing about the zero lag indicator is that it has a data series in it. So the signal, let's just start with a long signal here. We can say the long retracement signal, which would be up here. And you just cross that off, and then we are going to compare that to a fixed value. If that is 0, then we will take a long trade, and the long output here is set to 1. So if zero line is greater than 1, then we have a signal for this. So it's a neat way to create a strategy in Bloodhound, especially as it is already in the data series of the zero line oscillator, zero lag oscillator. We have that in here, so we can put that zero lag long retracement, and then we add that to the logic, and then we can check that this is correct. And it is. You see here we have a retracement signal right here. Okay, great. Okay, so now we go in here and we're going to copy this. Well, hang on a little bit. This is actually, we need to put this only to a long signal. So we're just going to have long outputs on this. That's important because we're working with the data series here. So we'll be able to isolate the signals much better that way. And we're next now just going to copy this and create a short signal out of this zero lag short retracement. And then we want the output here set to 1, and we're going to get rid of the other ones. And here we're going to cross off in the data series that we're looking for. And we already said we want the short retracement signal on this one. And next step is going to go into go into the logic tree here, select our new solver, and test it that it's working properly. And here you see we have a retracement signal here, and that's working as it should. Okay, so now we will add the pyramiding signals. Those will allow us to add to the position. So we can just continue here with the existing nodes and copy them. So here we had zero lag short retracement, and now we can set this to short pyramid signal. We're just looking at short signals for this. And here we will now select the pyramiding signal. Okay. We hit OK. And we do the same for long. We copy, rename, and set the appropriate data series to long pyramiding signal. Now, another thing here is you can select all the other things that come with the Zerolag oscillator. So the oscillator lookback period, the type of trend filter, the overbought, oversold threshold, and trend exhaustion threshold. If you want the weak retracement signals or the weak pyramiding signals, you can select all of this in here. And if you select it in here, you need to select it on the chart as well. So here you see I have this filter on, which means that there are no weak pyramiding filters or weak pyramiding signals in the strategy. So that needs also then to be the case on the chart. So here you see a weak pyramiding retracement as well on the chart. A weak pyramiding or a weak retracement signal is basically a little bit more lax in terms of giving the signal. So you see here we have 1, 2, 3 retracement bars, and then we have the signal. Whereas here we didn't really have a overbought scenario. These are not yellow bars, so it's not really overbought, but it will allow us a signal anyhow, because it's well, set to give a bit more frequent signal. So if you want to have that turned off, then you go into the Zerolag dialog box. They're turned off by default. It's a filter function, so they need to be set to true in order to have them set off. And then you hit OK. There's a couple of other options with the Zerolag indicator that you can choose as well. As mentioned, the lookback period for the oscillator. You have the trend filter. I'm using the volume trend, so you also have the option of working with regression and super trend. If you're working with Forex instruments, you probably don't want to use volume, because there is no centrally located exchange for Forex products, so volume information is going to be incomplete at best, and so maybe you want to set that to none or create a different trend filter for that purpose. And the gray filter bar is basically telling us, like for example, here we have a situation where we have a gray filter. So we had here a overbought situation and a retracement into a downtrend, but then there was no renewed selling as of here. So with the retracement filter, we allow a maximum of 3 yellow bars, and then if you start seeing gray bars like this, the signal is basically turned off and invalidated because it took too long for renewed selling to appear. There were no sellers that took advantage of these higher prices. Eventually they did up here, so if you had this filter turned off, then we would have a signal coming out of this. So it's basically a way of qualifying the signals a little bit better. And as I mentioned, if you want this to be reflected in your strategy, you need to define those values in here. Okay, so let's add all of these into our logic tree here and see what happens in our strategy view. We add the new pyramiding signals that we just added. So we have one here and the long one. And now we also need to add a logic node. So it's going to be or. Either we have a long retracement or a short retracement or a short pyramiding signal or a long pyramiding signal, in which case we want to see signals. and it looks like this is working correctly. We have signals on long and short retracements. We have signals on permitting signals. So this works as expected. Great. Okay, so then we will move into the final part of this presentation, which is to add the headwind filters. The headwind filters will prevent us from trading straight into landmark support and resistance areas, which is very important to improve our profitability. So in Bloodhound, there is a great solver which is called support and resistance. And we're going to use that now to define our the areas where we want to stay out of our trades. So we add this, and this first one is going to be called, let's call it pivot headwind. Okay. So we are now going to evaluate based on the pivot point indicator. And what we do is simply go in here and choose the lines that are offered to us by the pivot point indicator. So here you see we can click on the pivot point, the support and resistance lines above and below the pivot. There are 4 of them on each side. And we're going to skip the mid bands. And we're going to add the central pivot, which is a simple range calculation, the high and the low divided by 2. We're not going to use the directional pivot, but we are going to use the high and the low of yesterday, as those are also important support and resistance levels. We are going to hit OK. And then we need to define on what distance we are going to measure these support and resistance levels. We're going to use a ATR calculation, and we want these levels to be at least 1.5 average true range away from the support and resistance lines when we enter our trade. So we need to be 1.5 average true range away from the support and resistance levels as defined here. We're not using fuzzy logic here, so we're not going to deal with changing the settings for this. We're going to be working with close as a basis for this, and I think we're good to go here. And we'll just copy this and use the same for the VWAP. The VWAP indicator also draws support and resistance lines of previous days, and those are important to pay attention to. You'll often see a bounce back when the price is hitting the VWAP band of yesterday or of 1 or 2 days ago. And so we add that as well here, and we add it to our logic tree and pivot. I'll put that under here. And then we will set everything up with a logic node. And there's one thing, important thing about the pivots that I forgot to mention. There is the setting of regular traded hours and the extended or electronic session. And you can choose that in here. And for markets with a local focus, such as the E-minis, you want to have this set to RTH and the intraday data. In order to do this, you need to set up a session template in NinaTrader, you need to tell NinaTrader that the electronic session starts at 5 o'clock Central Time, and the regular open is at 8:30 Central Time until 3:15 Central Time. So you need to define those in your session template manager. I can quickly show you how to do that here. Let's see. Okay, so we go in here into the, well, I think I need to close out of this first. Here we go. Here is the session manager. And for example, let's add a new template to tutorial, and add the first session of the week. Starts at 5 p.m. on Sunday, and it goes until Monday morning, 8:30. That's the start of the regular session, and goes from 8:30 until past 3. There's a 15-minute break. So again in the evening session here at 3:30, and that goes until past 4. And then there is a 45-minute break, and then everything starts over again. So we have Monday at 5 going until Tuesday morning at 8. I'm not going to add all of this, but I think you get the gist of how to set this up. Very important, though, you need to set this to the exchange time. So the only time that matters is when the exchange is open. This is located in Chicago, of course, CME. And so when you're done with this, you hit OK. I'm going to hit cancel now because this is not a complete session template, but hopefully you understand how to do this. If not, have a look at the session template handbook and you'll be good to go. Okay, so I think that is it for the tutorial here. Yeah, for pivots, make sure that you're working with the right price levels. So the regular trading hours are based on the high and low and close of the regular session yesterday, not the electronically traded session, which includes the Asian markets and the European markets. It's not so relevant for the underlying values in the index future. They are traded during the regular hours, so that's the appropriate high, low, and close points to pay attention to. So if you have any questions about this, drop us a line at our contact form over at LizardTrader.com. I hope this has been of value to you, and don't hesitate to get in touch if there are any questions or comments. We're always happy to hear from you. So be in touch soon. Thanks. Bye-bye.